convergence as to the structural marriage of two different industries. So that's, truly insurance and the capital markets coming together, and one leveraging the strength of the other. So I think really the impetus for this in Bermuda and really getting the exchange excited, and I think what we talked about in our last panel is looking for niche opportunities, and you heard some of the things we talked about. Insurance-linked securities for us at the BSX is a natural low-hanging fruit for Bermuda. This morning, I think you heard the panel talk about how we have the mind and management of a lot of these very, very sophisticated, huge companies providing very large coverage to the world, resident in Bermuda. You heard me talk about having a modern stock exchange in Bermuda, and intuitively to me, the insurance industry will need capital. If we look at the world and look at where insurance coverage for property catastrophe actually exists, it's in most of the emerged economies. There's huge areas of the world that don't have property catastrophe or perils coverage. So this is just an area that's going to continue to need capital. And the insurance industry, to be able to support coverage for this, is going to need to attract that from somewhere. I think leaving it in capital markets terms, yes, you could always go to the capital market, raise some equity. It's expensive, you put in bricks and mortar, and you have it. Now we're looking at that next wave. How do we raise that capital? And the bricks and mortar is there, and we just need additional capital to provide cover for different perils. And in comes, I think, the next nuance, the next, evolution of reinsurance in Bermuda is creating a capital markets vehicle that supports that through the SPIV, the Class 3. Rick mentioned Class 3. We have a 4-class insurance incorporation process depending upon the commercial attributes or the size of the company. And in the Class 3, it's a larger company, but this particular area of the regulation has been changed a bit to make it a little bit more streamlined and commercial, to launch a product which creates a capital markets type of mechanism to raise capital for an insurance company. Now, how the BSX got involved, we've watched that legislation develop, and about 2.5 years ago we started watching cat bonds pop up and list other places, and I kind of would walk around Bermuda and meet with my colleagues from the insurance companies and say, hey, these are domiciling there, and I want to learn more about this, and they'd ask me why, and I'd say, because I think this is kind of interesting, the listing side of it, we can add transparency to this, and we can kind of accelerate a little bit of interest in this new asset class, so the capital markets can truly get excited. Because remember what a cat bond is, from our side as a capital market, it's a truly a natural hedged instrument. So it's an instrument, a capital markets instrument, that's not theoretically predicated on what's happening in the financial markets. It's based upon a peril in the natural world. So everybody was very excited about this because it was a natural structural hedge to the financial market. Until, of course, this awful thing happened called the credit crisis, and we found out that some of the cat bond structures actually were underpinned by contractual obligations through some of the brokerage firms, one of which, gloriously went poof in the night, and then Lehman disappeared, and we had 4 cat bonds that just went belly up. And everybody started to go, ooh, there's no correlation, but peripherally there is, because all of a sudden there's this structure that was there, we invested in it, it's no longer there. To my mind, that opened a really interesting avenue for an exchange, any exchange, to go back and say to the end investors in these structures, which a lot of times are professional investors, pension funds, who have fiduciary responsibilities to their end investors, to say, look, even though before the Lehman debacle, you were all very happy investing in these because I knew Rick, and Rick's a good guy and it's a great product and this is a great return, but now, oops, we've had this situation and we have to show that we're doing some diligence on the assets that we're allocating to the new class. So I could go in as the exchange and say, look, one of the ways that you can start to cover this off is listing these things on an exchange, because part of the regulatory infrastructure of an exchange is to make sure that there's information that flows about the transaction, that an end investor can look at what the deal's comprised of, and more importantly, who's doing what within the deal. So they can they can determine if there's structural risk or weakness in the deal because of a counterparty. So we went back into the market, and the things have changed. So, my discussions with folks in the ILS space, the insurance-linked security space, back then it was all about valuation, et cetera, et cetera. Now it's about transparency and a bit more disclosure in these products. This is a sophisticated market. It's, and it has some very, very distinct nuances. But it's a market that's growing, and it could be very, very interesting. And I see massive opportunities for the capital markets. There's 3 places in the world I think this should happen. 2 of which, one's London, one's New York. The exchanges, they're not focused on it. They're worried about, Reg MMS in the U.S. and fragmentation and flash crashes, and the MiFID in Europe. And then there's Bermuda, where we have the exchange that's designed regulation for the listing of these securities. We have the mind and management that wants to create these products in Bermuda, and we have the facilities to do it. We now have 10 cat bonds listed on the exchange with the market cap of about $1 billion US dollars. Yeah.
One couple things on that is the just to put it in perspective too, the cat bond market, I think historically the total number that's been issued is $30 billion. It goes back to '96, so it's a very relatively small space that will grow. Another thing is I think it's interesting talking about capital markets is that when again cat bonds in particular, when they started out, it was probably driven from the insurance side, just wanting access again to other alternatives other than the traditional reinsurance markets. But I think now it's being driven more from the capital market side, which is why there'll be more transparency.